this final lesson of the crash course into trading, we will be talking about technical analysis. After this lesson, you should be able to do a basic analysis of a chart. Market psychology is a theory which showcases the flow of a market. This has been researched and proposed by Wyckoff, and he has identified 4 phases of the market: accumulation, markup, distribution, and markdown. In the accumulation phase, this is when the market is moving within what we call a range. It is not really rising exponentially or falling exponentially. So within this phase, the accumulation phase, that is when the commodity or the currency is not really being bought or sold, and it's being held until the movers in the market, which are the big banks and the hedge funds, decide whether they are ready to push the market in an upward direction. Once they decide that, there's usually a fake out, or what you could see on the screen as a low volume failed sellout, and then there will be the markup effect. This is where prices will eventually go up to a point which is called a buying climax. So this is where a lot of buy orders are being placed, and once it reaches climax, it's going to go into another hoarding phase, so to speak, called the distribution. And this is where now again they are holding positions, the market movers, until they're ready to push the market down, and there again will be a fake out or a failed rally, as you can see in the diagram. And then there will be a markdown effect where the prices will dramatically drop as they move the market back down. So once you start looking at the charts in whichever currency you'll be looking at, unless it's a currency pair that is majorly ranging, and I would say the USD CAD ranges a lot, but you will still be able to see this market psychology happening at least on smaller scales, right? So once you look at any chart, you should be able to map out this market psychology. Once you get your eyes in tune to reading charts, you'll be able to see this pattern and therefore anticipate it. So let's talk about trends. A trend is the overall direction in which the market is moving at a particular time. The market is dynamic, which means it could turn around and change direction at any given moment. Now, there are 2 types of trend: a bullish trend, in which the overall direction of the market is up and traders tend to place buy orders, and a bearish trend, in which the overall direction of the market is down and traders tend to place sell orders. Now, one thing to note is that in identifying a trend, it will enable you to find the best positions to buy in an uptrending market or sell in a downtrending market. Remember to always trade with the trend. The trend is your friend. Now, this diagram is showing an example of a bullish trend, and this diagram is showing an example of a bearish trend. Support and resistance and trend lines. These 3 things enable traders to read price action. Price action is how price moves in the market. These support, resistance, and trend lines can map out points at which the price can either react or reverse. So support is like an imaginary floor that price bounces off of and is taken as the lowest point in the market at the time, whereas resistance is like an imaginary ceiling that prices bounce off of and is taken as the highest point in the market at the time. Here are some examples of support and resistance. So as we can see, in areas of support, prices are bouncing off of the zone and going back up, whereas in areas of resistance, prices are bouncing back off the zone and going back down. Now, a trend line follows price either upwards or downwards through the market, and it is a diagonal line versus support and resistance are horizontal zones, right? This diagonal line connects data points which inevitably fall on a support or a resistance. So there's a lot of crossing and connection between areas of support and resistance and trend lines. And usually when these two things collide, that could be a very, very good point where price can react. So once the fluctuation in price is remaining above the trend line, the market is continuing in an uptrend, and once the fluctuations in price is remaining below the trend line, the market is continuing in a downtrend. Only when the price crosses a trend line is when you can say, okay, the trend is over and price is reversing. So it's really good that you know how to identify trends and plot them on the chart. So this is how you draw support, resistance, and trend lines. So each zone, because support and resistance is more of a zone, or line, which is the trend line, requires 2 data points in which to plot. Alright, so it comes just like if you are doing math and you have a graph, you need at least 2 points in order to draw a line. And the same thing, you need at least 2 points in order to draw the zone, right? The third point along this line or this zone at which the market price comes back to is usually, as I had mentioned earlier, a major reaction point in the market, and hence that major reaction point is a good position to place pending orders to either buy or sell. One thing to note, according to the time frames, whether it be a 1 minute chart, 5 minute chart, 15-minute chart, 30-minute chart, 1 hour, 4 hour, 1 day, 1 week, 1 month, right? Each price bar will embody that particular time period. That is, on a 1 hour chart, each price bar takes 1 hour to form. So we're back to the question that we proposed in the beginning of this crash course: to trade or not to trade?
That is the question.
Some of the things that I have concluded is that trading is a skill that takes time, effort, and perseverance to acquire. It is a skill that requires instruction from mentors or professionals. That being said, instruction of a high caliber would demand high compensation. Now, I'm not saying that you can't learn trading on your own. There are books out there which I will be reviewing in the future, and there are programs out there where you can buy a course, or you can get some coaching, or you can get some form of mentorship. But all in all, you would need to identify what would be the best option for you and what is the best way that you learn. One of my past mentors I had would say, do you want to learn from mistakes or do you want to learn from mentors? That being said, I'm not saying that my mentorship was phenomenal or even groundbreaking, but I do believe there may be some legitimate mentors out there. And I'll be speaking about this mentorship and this platform that I had joined and that introduced me to trading in the next video in this series, right? I will be going through that and I will try to be as objective as possible. Of course, there are a lot of emotions involved, but I'm going to try and give you mostly the facts and basically my experience. Now, you would now have to make a conclusion for yourself. What do you think? What have you concluded from going through this crash course and getting introduced to the basics of trading? You would need to now decide whether this is something for you, but at least you would have gotten your toes wet a little bit and realize if this is something you really want to do, or if it's like, okay, this is not for me, I don't like it, right? But you were able to make this decision just as I promised at the beginning of this crash course in lesson 1, that you didn't need to spend any money to figure out whether or not you want to go down this path, right? And I believe with all the social media forex traders out there and all the big supposed wins that they are getting and this grandiose lifestyle that they are pushing, that you would see what it really is and that you'll be able to now have a better understanding of forex trading. You'll be able to make an informed decision. You won't be easily swindled, hopefully. And by the time I make my next video, you definitely won't be swindled by any of these people. Now, I have a little confession to make. This video series that you're seeing here, I did do this or create this as a marketing strategy for the company that I was with, but I never went through with recording it or even presenting it in real person, because I have performance anxiety, or how you call it, like I'm afraid of public speaking. Yes, I'm afraid of public speaking, and even making videos in which I'm showing my face is still challenging to me. So you'll see some videos on my channel with my face, but some would be more like this, which is much more easier and comfortable for me to do. Anyway, I hope that this course was informative. I hope that you learned something, and I wish you happy trading and good luck. I'll see you in my next video about the company that I was with.